Great. So yeah, thank you for joining. Good afternoon, everyone. My name is Dale Anderson. I'm the managing director at Fabric Property Group, also Fabric Invest Limited. We specialize in sourcing UK buy-to-let property. We do take a very educational approach. Normally, we'll look at macroeconomics of areas and different countries and cities. And today we want to talk about Manchester. In fact, I just recently I've seen people inputting into what we call ChatGPT and AI. What are the best cities to invest in? Various prompts bring up Manchester in the top three cities in the world to invest, which is encouraging. So yeah, I've got 18 years experience in the industry. We've won awards for most trusted property investment company 2024 at the SME Awards. We won awards in 22 best hybrid property investment agency, and I was pleased to be nominated for the Under 40 award when I turned 40. I'm now 40 years old. I've got with me Matt Harper Penman. He's one of the group directors, very much hands-on operations on the UK at the office. So, Matt, without further ado, would you like to maybe just do a quick introduction of your role in the company and
Yeah,
what
thanks,
is you do?
Dal. Lovely to see everybody. So my role in the company as group director is really handling the UK operations side of our business, really client facing. So, I've spoken to some of you before, but we are really your support team here in the UK, whether you're based in the UK or if you're based overseas, where we can support you in every aspect of your UK property business. A bit like Dow, I've been in the industry what seems like a lifetime. So I've been in UK property for 14 years. Got a vast of experience in all different strategies in residential.
Great. And what I like about the team, we're quite dynamic and diverse. There's not just sort of, some clients have different requirements. We're not going to say like just buy an off-plan or new build apartments. That's kind of the area that I have more expertise in, but Matt can also source alternative investments, commercial, HMOs, things like that. So yeah, we can offer a range of different services. Today we're going to talk about Manchester. Something I don't normally like to talk specifically of products, but that we've come across something Matt and the team have sourced. And with everything happening in Manchester, I just wanted to give you a bit of a background on the company first. So we were founded in 2014. Collectively, all our staff have at minimum 10 years experience in property investment, or, RICS chartered surveyors or qualified in their specific field of expertise. We currently have an office in London, also Hockley, and then Cape Town, where we operate from. But we do have affiliates and partners in places like South Africa, the UAE, Dubai, Turkey, who work with us. So they kind of plug into our systems. We can white label, and then we can offer our products which have been vetted. Part of my job is the due diligence, and some people find it quite funny because my due diligence list, having done this for so long, is quite extensive, and sometimes developers just don't reply to me. But the ones that do, we know they're safe, solid. Today we're talking about a completed development called Potato Wharf. But first, as an introduction, so you've got Dale Anderson on the management team. Steve Jacobs has a wealth of experience. Steve and Matt actually met some time ago and started their property journey with Fabric Property Group, and then I joined in and we really took things to the next level with the new build and off-plan division. We also have Mike Bellini, who heads up asset management and acquisitions. So he specifically tailors solutions for family offices and the asset management side of the business. Then under us, we've got consultants as well as operations, compliance, AML. Do you want to tell us a bit more, Matt, about our process there in the office in
Yeah,
terms of the wider team as such,
yeah,
so people don't just think it's just me as usual on the webinar. There is actually a bigger operation behind us.
quite. Yeah. So it's not just the figureheads that are here to support. So we've got a big support team within the company. So, like you rightly said, we've got a team of consultants which are helping clients on a one-to-one basis to achieve their property goals in the UK market. And then once you've suitably found the right property that's going to be the one that you take forward, we've got a purchase support team which are there to hold your hand at every stage of your transaction. Helping you with the solicitor, helping you with your finance if you're taking finance, for example, and making sure everything moves smoothly whilst you're in the purchase process. But then, really importantly, probably the most important part of the journey and the process is the aftercare side. So we've got a real focus on aftercare. We've got a great guy in Daniel Harburn who heads up our aftercare team, who's there on hand to effectively look after you and help you with anything thereafter. Of course, your consultant is also there as long as you need them as well, but we've got a dedicated aftercare team to assist as well.
Great. Thanks, Matt. That just gives a bit of insight into what's happening in the UK and the lifetime aftercare that we provide. Because many companies, they sell you the property and then, things happen. There's management companies involved, letting. So it's good to know that you've got a team of experts on the ground. So what do we offer? At Fabric Property Group, we're dedicated to ensuring your property investments are not just secure, but positioned for long-term success. There's off-market property deals that you won't find listed on Rightmove, so some of them are off-market. We then offer full management and service with regards to lettings. We do sometimes use recommended letting companies in specific areas because we find it's good to have a local presence, for example, in Manchester, rather than a management company that's in London. You want someone nearby just in case there are things that need to be taken care of. And then we do the end-to-end support so we can help with mortgages. Our mortgage lenders panel do get access to the very best rates on the market without a doubt for these types of projects, or whether they're investor-led schemes or others. They all kind of have access to similar lenders, but I think it's important to note there is a certain way to go about getting mortgages, especially on new build and off-plan stock. And then we do the lifetime partnership from sourcing to, as well as exit strategy and reselling the unit for you. So that's a bit about that. Why clients choose us: hassle-free asset-backed investing. We've got access to high-growth cities. The main core cities seem to be Manchester, Birmingham, commutable areas around London. London is getting very expensive, so the forecasts are not as strong recently in the latest Savills data, which we'll go into. And then we also have long-standing developer relationships. The due diligence first-led approach, I think, is what sets us apart to making sure clients are making an educated call. Is there anything else on that, Matt, you want to add regarding the portfolio management side service and other services we can offer?
Yeah, I mean, we just offer a holistic approach to UK property investing. So whatever the thing you need help with, we can help with a solution. So we're very approachable in that fact, and I think you've done a good job of rounding what we offer.
Fully comprehensive service, so 360 degrees. Prices are direct from the vendors and direct from the developers in most cases as well. So this is the latest data. We actually, this just came out recently in July by Savills. So what's happened is stamp duty tax has obviously gone up recently, which softened the market, but more so the higher end of the market. What we are seeing, which is encouraging, is whilst buyer sentiment sort of was slightly subdued recently, it could be summer holidays, could be the stamp duty tax, or also the trade tariff wars and things going on, Trump being controversial as it is, it affects things. But what you can see clearly is the Northwest is top for growth now. It's jumped from 29% capital growth to 31.2%. If you want the Savills report, we can provide that for you. Just put in the comment section Savills report, and we'll get that sent to you. So that's all the latest data-driven news. We also look at Rightmove reports. We look at Zoopla, and then I've got a newsletter on LinkedIn, which I send out every month, updating everybody on the latest house price index indices and also the rental house price indexes. So why Manchester? Very quickly, I mean, again, the Savills forecast has now increased to 31% compared to the UK average of 24%. There's been 104,000 new businesses alone being created in the last few years, and the population is expected to grow from 2.73 million to 3 million by 2035. What we're seeing there is undersupply of housing. So that's what's kind of creating this northern powerhouse effect with Manchester. So even things like the high-speed rail has just not affected the growth of Manchester. And I think what they got right was the council really did a good job with planning permission, appointing the right contractors and developers in the city, but also it's attracting what we call semi-migration where people are moving out of London into Manchester because there's a huge corporate companies there. There's the BBC, there's some major banks. So that's kind of what's happening. There's more people, more young professionals, more jobs, not enough homes. So obviously that for long-term growth, as long as you're not speculating, long-term capital growth, it's already risen. I've seen prices go up 30, 40%, I'd say, in the last few years in Manchester, Matt. So, from your perspective on the ground, you've been to site, you've been to Manchester multiple
Mm.
times. Grateful for that. You've shown my clients around as well, and the feedback has been brilliant. They said Matt's taken a very educated approach to the market, and he has shown them all the very best projects in Manchester. But yeah, how does the undersupply play out in Castlefield or places like Deansgate? What kind of tenants demand are you seeing locally? What's driving the market?
Yeah, really interesting question. And just to sort of come off the back of what you said a second ago about semigration, people moving from major cities like London to Manchester, or things like I read a stat the other day that 80% of the top FTSE 100 companies have got a head office in Manchester. So that is
Okay.
then really supporting employment and job creation. So that's
Mm,
really driving more rental in the area. In
okay.
terms of on the ground, we're seeing a real flight to quality with tenants. So looking for the best locations and also the best quality of property. So the best
Yeah.
specification of property, and it's quite an interesting scenario at the moment because, as we all know, cost of living's gone up, inflation has really taken hold in the last few years, and that's no
Yeah.
different when it comes to construction prices. So
Okay.
developers are really struggling to build really good spec developments for
Mm,
the same price that they used to be able to. Well, they quite simply can't. So, there's a
mm,
really interesting opportunity for buildings that have been developed in the last few years are really
mm,
presenting themselves as good value for money opportunities because they've still got 10-year build warranties in place,
mm,
but obviously been built at that lower pound per square foot, which means the sale of them can be done at a
mm.
better value than, let's say, an off-plan property can be. So, yeah, there's a lot of
Interesting.
things happening, but there's real drive in rental growth. One other point I just made a note to talk about was the stamp duty changes this year. Of course, that sort of really has driven rentals as well, because of obviously the stamp duty going up, more renters in the market and potentially buyers. So lots of things to talk about, but yeah, Manchester's seeing a lot of growth in the rental space.
Great. So as you can see, that's why we are currently ranking Manchester as our number one city for investments. Castlefield, Spinningfields, these are the kind of areas people want to be in. Very central. It is one of the most desirable zones. I believe it's a peaceful canal side district. So, but as Matt mentioned, you've got an undersupply opportunity. There's only, I mean, the UK government alone needs to build 250,000 homes a year. They're probably delivering half of that. So that's what makes the UK attractive, which we have covered in previous webinars from a macroeconomic level. You can go and watch those webinars. We can send you the links on why the UK is a hot market, but key hotspots for us, Castleford, Deansgate, and also Salford around Media City, where you can get a bit value for money, but certainly, closer to the city centre in one of these nicer areas is better. I mean, what is your thoughts on Castlefield, Matt, having visited the location?
Yeah, I mean the number one thing for Castlefield is location. You're in the sort of southwest quadrant of the city centre, so you are classed as city centre, and you're
Mm,
right near water as well, which I think is always a plus when you're looking at property. So you've got the Manchester Ship Canal, which runs
mm,
through Castlefield there, and you've got a lot of historic buildings as well. So the council have done a good job at preserving the look and feel of
mm.
old Manchester, if you like. So yeah, I really
Okay.
like it. But I'd say the number one thing for Castlefield is you can be in Deansgate and Spinningfield within 5 minutes walk. Super connected.
Great. So yeah, it's all walking distance of Deansgate, Spinningfields. That's where your business district is. You've also got then the 1 billion Media City UK expansion, and then the Castlefields Viaduct Sky Park, which is now undergoing a 2.75 million expansion, funded by National Highways and the City Council. So that was quite interesting. If you look at Viaduct, that'll double in size and link Castlefield with Pomona Island by 2026. That's something I came across. And then viaducts, you've got that developments there, and other skyline projects by the likes of Sailboy, Renica that are, flying up those bigger towers. So I think really the spotlight today is on Potato Wharf. As Matt mentioned, we are moving more towards a market where new build costs have gone up. So where we're finding opportunities is projects which are completed or sometimes close to completion, but the price per square foot is a bit cheaper. In terms of the rental growth, average rent in Manchester currently £1,257. Now that's an average of the whole of Manchester. City centre prime areas, you can be looking on a two bed more likely 14, 1500 for, depending on the spec. And then there's also not just your capital growth, there's rental inflation. So according to JLL, there'll be 21.8% rental growth due to the undersupply by 2028. And then you're looking at standard rentals, your net yields of around 5, 6%. On some of the more expensive stock, that's now coming down to around 4%, depending on whether it's a long-term or short-term strategy. So we'll go to the next slide. So the regeneration, as I mentioned, you've got £1 billion Media City. There's the £4 billion Victoria North regeneration. There's Viaducts Tower and Deansgate South modernisation. So it's really like I went to Manchester 10 years ago, and then I went last year. I was around, I think, November, and it was just crazy to see how it had transformed. The only way I can describe it is old historical heritage buildings meets new sort of Hong Kong skyline, I guess, like a hybrid. So it was very interesting. One of my concerns was, there might be a bit of an oversupply with so many apartments being built. But what's your thoughts on that? It sounds like the latter and the units are renting out very, very quickly. Any thoughts or feedback on the regeneration and the tenant demand, Matt?
Yeah, again, it comes back down to what you showed a couple of slides ago. The UK is drastically underdeveloping new homes for the population. You've had
Mm,
in recent years, you've had mass influx of population of legal influx of population, and that's not discounting the illegal that we're noticing in the news today. But it's focusing on that. You had the Hong Kong BNO visa. That was a big influx. You had a lot of South African movement. With unrest in territories like that. Same
mm,
with Turkey. So, you've got a lot of demand from overseas coming into the UK. And that's not
mm.
just a case of homegrown population growth as well. So,
Yeah,
the key thing really is location, like I touched on earlier, and
mm,
quality of stock. If you've got both of
agreed.
them, you're going to let very quickly.
Mm,
Central Manchester is letting within days, if not, a couple of weeks to get, if it's priced correctly, of course. There's a recipe of location, pricing, and quality.
mm.
If you get those right, you're going to let very quickly.
Great. So lots going on in Manchester, as you can see. Manchester versus other cities. I thought this was very interesting. So Northwest plus 31%. Manchester is really in the middle of Northwest is obviously a larger demographic of cities. Liverpool does sit there, but I think Manchester certainly had the spotlight as the number one city in the Northwest. So there's your UK average versus your Manchester average on rental growth, and then your UK average of London growth compared to the Northwest. So why invest in Castlefields? Again, number one of the most sought after zones in Manchester. This is just sort of a map of Manchester. I think most people know where it is. A lot of football fans and stuff. So when people go there, sometimes we'll take them to go view properties and then watch a football match as well. I do get a lot of clients from Hong Kong, South Africa, like you said, even Qatar. We did an event out there, great city. But of course, there is conflict going on there. And just a few days ago, like rockets flying past. So people are like thinking, okay, maybe it is a good time to diversify into the UK despite, tax and things like that, which we've always had to pay anyway. But yeah, we think it's reasonable. It's walking distance to Deansgate, premium rents from professionals, young executives, and it's a picturesque canal side setting. We've got a really good video that the marketing team did, and that's something we can also share with you. So next spotlight on Potato Wharf. The team have come across a project that was delivered by Lendlease. It's a globally trusted developer. Very large, spacious two beds at 375,000, right near the city centre. You've got a 999-year lease is the best you're going to get. Projected net yields of 5% plus, and we believe those rents will start to go up as well. There's 10 units. We launched just over a week ago. Matt and Steve, I think, already sold two or three of those units. So that's great news. But there are some incentives, of course, for early investments. In terms of Potato Wharf, do you want to maybe, Matt, just give us a bit of a background there about the apartments, high spec windows, floor to ceiling windows, canal views? Why should people be looking at Castlefields versus, say, some of these other projects on the market?
Yeah, sure. And it comes back down to really what I mentioned not so long ago about there being a real undervalue opportunity with recently completed stock, but has
Mm,
been developed to a very good specification. New
yeah.
build developers right now are not able to develop to the same specification for the same price. So you're
Okay.
competing developments locally. If you reach out to us after the webinar today, we can share with you our full valuation pack and all of our material. You'll see that the property is the best value of its class in the area. The comfortably the price per square foot is a lot higher with competing developments than it is at Potato
Yeah.
Wolf for very
Okay.
similar amenities. You've got the waterfront there, so that would be the biggest opportunity, is the undervalue for the actual specification of stock you're going to be getting.
Okay, great. And then I was doing some due diligence myself, as I always do, and I was checking the prices. So great products on the market, Obsidian, Waterhouse Gardens, but they're all at about 590 per square foot. I see Potato Wolves coming at 515 per square foot. So, like you say, because of that inflation and build costs, we can get you a brand new completed unit, which is coming in. Correct me if I'm wrong, Matt, 15-20% cheaper, right, than the
Yes,
premium new build. Yeah.
correct. Yeah.
So completed stock, you're getting it below market average in a prime location with a yield and strength, strong rental strength already proven with tenants in situ. So yeah, some pictures of the apartments. As you can see, the finish is really great. Very nice furniture packs, floor to ceiling height windows, sleek modern kitchens with integrated appliances, luxury bathrooms with chrome fittings. So do you want to tell us a bit more about the apartments, Matt? What did you think of them when you went to go view them?
Yeah, I'll be honest with you, it's the best specification that I've
Mm,
witnessed in Manchester, and I've worked in Manchester for a long time.
mm,
We've got a whole wide access to the market. So yeah, you're going to have, it's a gated community, which is the first thing, big tick. You're on waterfront, so your moments from having a nice relaxing stroll down the canal, really
yeah.
nice. They've got video entry system, which is always a big plus. There's
Okay.
gated additional facilities like parking as well that's available.
Hmm.
So yeah, so specification wise, really good, built-in Bosch appliances, so top notch spec. But I guess that the key, again, going back to location, is that you can walk a 5-minute walk along the canal. Some really nice bars and restaurants which are local to the property within a couple of minutes, and then of course you're in Deansgate. So yeah, it's just a real good mix of amenity and location.
Great. Okay. And yeah, so in terms of the Manchester overall, definitely one to look out for. We'll do a Q&A at the end. I just want to make sure that the chat is working. So I've just dropped in a message there for everybody to check. Otherwise, you can message me or Matt directly. But yeah, we'll get to that at the end. So a couple of units reserved. Now, we're not ones to pressure clients. We do like to consult first, understand your budget criteria and your goals, and then we can look at various different options, starting anywhere from your 60, 70,000 all the way up to 500,000. If you want central London, we can also source your stock there as well. Like Matt said, exterior and lifestyle, it's walking distance to all the main bars, restaurants, cafes, gyms. If you haven't spent some time in Manchester, I would highly recommend it. It's definitely, from my last trip to the UK, went from London to Liverpool to Manchester to Birmingham all within a few days, but I decided to stay overnight in Manchester because just, yeah, it's a really great vibe. It's got a good buzz, lots of digital nomads, tech professionals, and a lot of entrepreneurs moving to the city because of the lower costs of living and being closer to the hub. So yeah, that's it really. I mean, I've been working with Fabric since 2016. We invest in properties on occasions where we see excellent deals come up like this. The next steps, if you did want to look at a consultation on Manchester or with myself or Matt, you can book a free one-to-one investor consultation. We can also arrange finance and mortgage check support, which is included. So before you decide to go ahead, you can get an assessment on a mortgage. We will provide access to the webinar replay and investor guide. I do have a bit more stuff here. I put in a prompt earlier about, what are the best cities. As a senior due diligence and market research expert, what makes Manchester stand out? So we're saying GVA of 74.85 billion, the fastest growing city outside of London. Forecast population growth to 3 million by 2035. There's over 104,000 businesses. So everything we just mentioned, it kind of backs it up. The £4 billion Victoria North region, 1 billion meter city expansion. So lots going on there. A lot of investment from abroad, including the UAE. And then, yeah, I just think it's a solid, safe investment. You may get higher yields in some of the other cities, but I wouldn't always be. One thing I always advise caution is if it still sounds too good to be true, make sure you do your checks because there's things to consider like service charge, management fees, making sure there's good block management. I mean, what's been some of your experiences, Matt, and your feedback with that regard?
Yeah, it's an interesting one actually at the moment because block management we've seen in across the market, not just in one location. We've seen there's a stabilization period of service charge. So, if you're buying something brand new off plan, I'd factor in, a couple of pound per square foot above what's been advertised so that as the property stabilizes, that's another benefit really of buying something that's a couple of years old. The stabilization period has already happened. So yeah, I think always factor in a bit of contingency is probably a good bit of advice for any property investment that you're looking at.
Yeah, what I'm finding is uh, some developers, where they're managing the blocks themselves, sometimes, separate block, some developers are good at building, some are better, management companies are better at managing. So when they try and do everything themselves, sometimes the service charges are going up quite a bit. So that's just something the market needs to keep an eye on. I think there will be some more control around that. But what are the service charges looking like at Potato Wharf in terms of the financials and the rents?
Yeah, so it's there's slightly different ones between different apartments, but it's about £3.85 to £4 a square foot, which,
Yeah.
considering some of the Manchester city centre apartments are sort of north of £5 and north of £6 per square
Mm.
foot, it shows good value.
Okay, great. All right, so these apartments are moving quickly. Like I said, we cover the whole of the market. So it's an opportunity. A couple of us as senior sales consultants actually on holiday now, so you can actually speak directly to me and Matt, who are group directors. We've got portfolios of our own that we manage property-wise. We can book inspection trips. I would welcome now if you have any questions, just to drop them in the chat box and then myself and Matt will be more than happy to answer those questions for you. Thank you for joining. You can also register the code there. But yeah, any questions from anybody in the audience at this stage? Let's give it some time. I'm just checking now. Okay, so you may want to just message us directly, but feel free to put some questions in the chat box if you do have any questions. Matt, how do you feel? One question I had is what are your thoughts on the current stamp duty tax and how can investors sort of mitigate that, or do you see that as an issue?
Good question. Normally, stamp duty changes is usually a tax that the seller will end up paying, albeit indirectly,
Yeah.
typically because a buyer is just going to factor that into their offer price. So
Okay.
I think me and you was chatting the other day about some interesting data that's just been released by Savills, showing a sharp decline post the April changes to stamp duty. There's a real big
Mm,
surge at the start of this year, and everyone tried to
mm,
get the stamp duty, previous rates, let's say, and then it's been a big fall off. However, we've seen in the
mm,
last sort of 4 to 6 weeks a bounce back on the transaction curve, and I would have to say that in my own conversations with uh,
mm.
buyers that are looking to enter into the UK market, there's more appetite. Couple that
Okay.
up with interest rates coming down as well, softening.
Mm.
Yeah, there's definitely a more of a positive outlook towards the end of this year as we go into it.
Okay, great. And I've had another question. Is there a show home I can view at Potato Wharf?
Yes, there is. It's definitely recommended viewing. I think it views much better in person. However,
Mm,
if anybody hasn't seen the virtual walkthrough before, I'm sure
mm,
Dow is going to give you an opportunity to sort of book in a one-to-one consultation where we can take you through the video, the
mm.
walkthrough, because it gives you a chance to have a real good feel of the property.
Brilliant. Yeah, we can walk you through. We've got a Matterport, so it's all presentable. So you don't have to go to the UK. One question I get asked a lot is, do I have to go to the UK to invest? We can show you everything virtually. We've got videos, we've got Matterports, and we can actually guide you through on Google Earth. So we do have the technology now and the team to support securing an apartment. Now, there will be some limited incentives that we will offer to attendees. So we appreciate you attending, and we'll send that out if you are interested. Just put in the comments free guide, and we will send you a free Manchester property guide with all the updated stats. So if you want the guide, just put in free guide. If you want a consultation, just put in consultation in the chat, and then we'll definitely be in touch with you. But going back to Savills, I was looking at it. They said that we think that the UK mainstream house prices will rise, but obviously there has been a slight dip due to the stamp duty. However, encouragingly, we expect two more base rate cuts. So mortgage rates are coming down, and we're actually, in my opinion, we're now not in that hyped up sellers market. We are in a buyer's market. So what I'm finding, we're actually as a team in a stronger position to negotiate better deals. What are your thoughts on that side of things, Matt? Do you feel what cycle are we in, and is it a good time to invest?
Yeah, totally agree. We're definitely, coming off the back of what I just said about the transactions falling post stamp duty. When that happens, of course, sellers are much more flexible with their terms, and more suggestible, let's say. So I think it's the best time to be entering into the market if you're looking at UK property, because the
Okay,
best chance to get a good discounted offer is now, really. So talk to us
okay,
about that. We're happy to negotiate on your behalf and guide you with the best way to get the best deal, and let's do something. So I don't know if you've seen
yeah,
this question coming here, Dal, but it
yeah.
says, if I want to apply for a mortgage, leveraging my 2 units to buy a bigger unit, is it doable, noting that I'm
Mm,
a foreigner?
okay. So, are you going to answer that one, Matt, or
Yeah, I
do you
can do,
want?
mate. Yeah, no
Yeah,
problem. So,
I'll
yeah,
let you take that
so
one.
I'm going to come back with a caveated answer. So it does
Okay.
depend. You can do that, but it does depend what the current properties are. If the current
Yeah.
properties are able to be mortgaged, then yes. It also does depend on where you're located in the world. So that has a factor on it. So certain
Yeah.
countries are more challenging than others. So
Okay.
what I'd suggest we do, let's speak on a one-to-one basis. Let's explore
Yeah.
that further with our
Mm.
expert finance brokers, and then we can explore the options for you.
Yeah, I'm finding that obviously certain territories, it depends where the clients are from, but in most cases, like Istanbul, for example, we've
Yeah,
got brokers that can get you favorable rates. Another common question that came up is, can we help set up a bank account or limited company? It comes up quite often, this one, so I thought let me address it. So for non-residents, you can buy through a limited company. There can be tax advantages, but typically, and again, I'm going to put a disclaimer, we're not financially authorized to give financial advice. We can put you in touch with a tax specialist. Everybody's circumstances are different. If you're buying one unit and the income falls below the income tax threshold, which I think sits around 12,500, that's 0% tax deductible. But then, of course, if it goes over that, you then jump into it's a 20% tax bracket, Matt. Is that correct? Around there, or 18 to 20%.
That's right. Yeah.
But if you're going to build a portfolio and you may be looking at 3, 4, 5 units down the line, then it could help to put it in a limited company structure, because as your income goes up, you want to try and avoid the heavier tax or inheritance tax in the future. But for free tax assessment, just put tax in the chat or message us directly and we'll arrange it for you. But yeah, we're expecting some interest rates to come down, which is good. And as mentioned, 31%, they've increased the forecast for the Northwest. So there's a lot of attention there right now. Any other comments in the chat?
Yeah, one actually just come to mind, actually, just back on the back of the question you had about the 2 units question. Well, interestingly, this developer, talking off the back of it being a buyer's market, this seller is a family office that is well known to us at Fabric. They are open to different types of payment terms. So cash purchase is likely going to get you the best deal. You know, we all know that buyers tend to get that because the developer's going to get their profit quicker. However, you know, they are open to potentially being a bit creative in this market. You know, so timing's on our side with this. They potentially would look at, you know, a delayed completion on payment, staggered payment terms, which could work for somebody who's looking to spread the payments. Or they'd look at, you know, a financed route. So there's multiple things that we can look at. So if this property has interested you at all, I definitely recommend set up a one-to-one consultation with, you know, myself or Dal, and then let's explore that further and see if there's a structure that we could come up with that would work for you.
Brilliant. So if you just scan the code in the front, or you can email me, dale@fabricpropertygroup.com, you know, we'll be happy to assist further and provide you with a free consultation on your current portfolio. If you need assistance with mortgages, tax, or anything else like that, we'd be more than happy to help. So I don't think there's any more comments. Let me check in the comments chat box. Any final thoughts, Matt, or any giveaways?
No, I think yeah, if you want a consultation, like Dale said, put it in the chat, and we'll reach out to you. But yeah, I think that's everything really for today from my side.
Excellent. Keep it nice and brief today. So Manchester, we believe it's the #1 city for investment. Potato Wharf's a standout project. I haven't seen something like that for a while, and limited, as Matt mentioned, there's a limited number of units we've secured. We believe we're in a more buyer-friendly market. So if you're going to make a move, I actually think now is quite a good time. We could potentially negotiate a great deal for you if you're prepared to act swiftly. But we will take an educated, data-driven approach, and we'll support you all the way throughout the purchase. So thanks for your time, Matt. I really appreciate it. And without further ado, thanks everybody for attending. We really appreciate your attendance. Again, just book in your consultation. We'll drop you an email with a link. You can book in a consultation as well. And then we'll send out the webinar replay for anybody who wasn't able to make it. So thank you for your time. Take care. Enjoy the rest of your week. All the best.
Cheers all. Take care.
Take care. Bye.